How to get a mortgage if you're an insurance agent. My name is Sean.Rampersaud, a mortgage broker in Canada, and I specialize in getting insurance agents' mortgages approved. There's a whole load of different types of insurance agents, and this is for all types of insurance agents. So if you're an insurance agent and you're trying to get approved for a mortgage, make sure you watch the entire video. In the video, I'm going to be talking about salaried insurance agents. I will also be talking about hourly based insurance agent, owning your own agency, and personal corporations. We have special programs for you, and you're going to love it. A lot of insurance agents think it's simple. They think that the banks want to finance you, and that's not always the case. What the banks are looking for is they're looking for predictable and stable income. And in a lot of insurance positions, that's not always the case. So we're also going to be talking about the differences between the salaried employee, a person that owns an agency, self-employed person, hourly person, straight commission plus bonus, and new to the industry agents. So let's first talk on the salaried agents. This is actually the easiest category for me to get approved. If you're a salaried agent, you're going to get an employment letter from your work. So let's talk about the type of paperwork that you're going to need. Number one, you're going to need an employment letter. The employment letter is going to have to say what your actual salary is, your start date, and be signed and dated by whoever is taking care of it. Now, let's say your salary is $80,000, but you work a lot of overtime. So, or you get commission on top of your base salary. Like I know a lot of you do. So what would end up happening is your T4s would actually be higher than what your employment letter states. So what I would be asking for from you would be the employment letter, a recent pay stub to show that you're still employed at the job, and I would take your last 2 years of T4s. Now, let's say you walk into a bank. The bank is more than likely going to use your base salary as your income, so that 80,000 bucks. But let's say that your T4s are showing that you're actually making $120,000. And what the banks will do is they would average the last 2 years of T4s to come up with your income. You have to make sure you're dealing with somebody that understands your business. So you're really going to want to explain, this is how I get paid. Here's my base. It's 80,000 bucks, as you can see on the employment letter. But I make more money than that because of I earn commission on top of that. So what we would do together is I would take the last 2 years of T4s so that I can up your income so you can qualify for a larger mortgage. The same, very similar type of thing will go for hourly employees. So if you're an hourly employee, let's say you're earning $30 an hour, and you're guaranteed 40 hours a week. That is almost like a salaried position. Now, if they don't guarantee the hours, then that's a whole different ball game. But if you're a salaried person, or sorry, if you're an hourly person, then the banks would be looking at last 2 years T4s or the employment letter. And what they would do is, let's say you're 30 bucks an hour, 40 hours a week guaranteed. Especially if you're new to the position, then we would be using your base. Okay. So your base would be 40 times $30 an hour times 52 weeks in a year. And that would calculate out your annual income. However, I know in those positions, a lot of times you'll work extra hours or you might get bonuses or you might get commission. I would also be asking you for your last 2 years of T4s so that I can add income back into calculation. So your base may be $50,000 a year, just like in the salaried position, but you may earn $100,000 a year because of bonuses or commission or whatever that might be. So we want to use the higher income so that you can qualify for more. Now, if you're straight commission, the banks are only going to look at your last 2 years of T4s. Okay. They're going to average the last 2 years of T4s. Now, the way they calculate it, let's use 2 years here. Let's say 2025 and 2026. If your 2025 income is higher than your 2026 income, they're going to use the 2025 as your income. If your 2026 income is higher than 2025, then they're going to take an average of the last 2 years in order to calculate your income. So let's talk some numbers here. So if 2025 you earned 100,000, in 2026 you only earned 90,000, then we would use 100,000 as your income. If you earned 100,000 in 2026, and in 2025 you only earned 90,000, then your income would be 95,000 because we averaged the 2 years. So if you're on commission, that's the way it works. Now, that being said, let's say you're new and on commission. How are they going to calculate your income? First of all, I'd be asking for a very detailed employment letter. I'm going to want to see if they're going to guarantee any minimum for you. And I know a lot of agencies do guarantee a minimum. It might be small, it might only be 50 grand, but some places do guarantee an income, at least for the first year. The banks are going to want to see that you're in an upward trend, is basically the way it works. So the bare minimum that we could use is 1 year's worth of income. And hopefully you were in a similar industry prior to that. So if you weren't even an insurance agent, but you worked at an insurance agency, we can still average the last 2 years. Now let's talk about our self-employed people, people that own their own corporations or are agency owners. You would be considered self-employed. So what the banks are going to look for in that case is they're going to have a couple of different options. So the first option is they're going to look at your business financials. So they're going to take the last 2 years of business financials and they are going to average that. So they're going to look at your retained earnings, they're going to look at your expenses, and they're going to look at what you paid yourself salary. Now, most agency owners are going to pay themselves a very small salary, maybe 50 grand or $100,000. But they may make a lot more than that. Now, if they're the only employee, it makes it a lot easier. But even if you have a whole bunch of employees yourself, we can still do this. There is a special program for you called the Stated Income Program. And we can also use add backs from your business financials to add back to your income. So we can add things like your dividends. We can add things that you write off, maybe a portion of your house, phone bills, car bills. One strategy that I use for self-employed people often is if you have a car payment and you have that coming out of the corporation, I can remove that from your debts so that you can qualify for a larger amount. So you really want to be dealing, especially if you're in this situation, you really want to be dealing with somebody that understands how you get paid. So there's a bunch of workarounds for people like you. So let's say you're an agency owner and we're doing a standard mortgage, and then you actually do claim some income. So let's say you're claiming $100,000 a year. Your notices of assessment show that you're earning $100,000 for the last 2 years. We can use $100,000 for income. Now, if that 100,000 isn't enough, then I would dig into your financials, like enough to qualify for the house that you're purchasing. Then I would look at your business financials and then I would start adding some things back in using your business financials. So I could use the stated income program. So that's where if you, let's say, have $1 million in gross revenue, and then I want to state that you are earning $300,000, that would be pretty realistic. And the banks would bite on that. There's also another program called the bank statement approach to income. And through the bank statement approach to income, basically it's for business owners only. And they would take the last 12 months of bank statements, business bank statements, create an income for you, to create a personal income for you. So if your last 12 months are showing $1 million in gross revenue and you want to claim $300,000 as personal income, that would be realistic. Now, when I say claim the income, I'm not saying claim it to Revenue Canada. I'm saying stating the income to the bank, like, hey, I make $300,000 per year, qualify me for $1 million mortgage. So the stated income program that I was telling you about is for people that are putting less than 20% down. The bank statement approach to income is for people that are putting more than 20% down. So depending on how much you're putting down, we would have to go with a bank that accepts whatever program you require. And that's the nice thing about dealing with me is I deal with every bank and I actually get better rates than what you can get walking into a bank anyway. So basically what I do is I take your credit bureau and I go and shop you at all the banks. We only pull credit one time. So we make sure your credit score doesn't drop. But what if you're a brand new agent? Well, if you're a brand new agent, there's options for you as well. We would take your base salary, or we might take a contract and use that as income, or we will take whatever your guaranteed hours are. That's how we're going to calculate your income. So people will ask me questions like, well, what do I do if I have bad credit and I'm an insurance agent? If you have bad credit, then you're going to want to put 20% down. I can still get you approved through a B lender where the rates are higher by about 1%. If you're new and you're earning a small income that is guaranteed, you may want to add a cosigner, maybe a spouse or a parent or a brother or sister to your application. So, if you're newly self employed and you're a new insurance agent, you might want to have a chat with me about it anyway. I can talk to you about some of the strategies and some of the things that I've seen insurance agents do that can be big mistakes. So, for example, like taking out excessive amounts of loans, forgetting about paying their business taxes, thinking everything can be a write-off. It can't. Working on improving your credit score and keeping clean bank statements, not mixing up your personal stuff and your business stuff. However you package yourself and present yourself to a lender makes a huge difference. So you want to make sure you're presenting yourself to the lenders to the best of your ability. And I'll teach you how to get there. My name is Sean.rampersaud. Thank you very much for watching the video. I did a ton of different videos on some cheat codes on how to buy property, how to refinance property, stuff your realtors won't tell you. So take a look at some of the other videos I have and like and subscribe to the channel. Thanks so much.